guys, hope you guys are doing good. In this video, I will be discussing income tax amendments which are applicable for December 22 exams. So it's just a clarification before we start. Finance Act 2021 only will be applicable for your December exams. That means the assessment year would be 22-23 or the financial year or the previous year would be 21-22. No change with respect to that. There are only few changes, whatever is applicable for December exams. So there is no much amendments. Whatever we already covered in our regular class, maximum things will be applicable. Only few changes are there, which I would be covering it in this video, guys. Clear? Yes. And in this amendment notes, I have given a reference to page number, which is the page number as per my regular study material, so that it becomes easy for you guys to refer where exactly the amendment has taken place. Fine, guys. With this clarification, let us start with. So the first amendment is with respect to the heads of income. Under heads of income, the fourth head, come to that. So you guys, it would be good if you're also referring to your study material along with this. Yeah, coming to the fourth head of income, which is capital gains. There, slum sale under points on computation. Slum sale is one of the point, that is 15th point. Come to that, which is in page number 128. There, we have a point called C. What is it? First of all, what is slum sale? When the entire undertaking is sold for another person as a going concern without assigning values to the individual asset, we call it a slum sale. And when there is a slum sale, it is a transfer and capital gains is computed as per section 50B. It is one of the special transaction. That is why the special provisions is covered in section 50B. Okay, sir. So what is it? We will see. Coming to C point. Fair market value of capital asset as on the date of transfer calculated in the prescribed manner shall be deemed to be the full value of consideration received or accruing as a result of transfer of such capital asset. This point was already there. This is not an amendment. Now, how to calculate this fair market value? They are told in the manner as may be prescribed. Agree na? So that manner is given now. The manner is given now. So let me just give a detailed explanation. See, whenever there is a slum sale, that is when entire undertaking is sold, the undertaking itself is a asset, capital asset. So if that capital asset was held before transfer for more than 36 months, then it is long term, and accordingly we calculate long term capital gain. Or before transfer, if the undertaking was held for less than or equal to 36 months before transfer, then it is a short term asset and we calculate short term capital gain. How to compute the capital gain is given in section 50B. Sir, what is it? Full value of sale consideration is nothing but fair market value. We have to take fair market value. And what is that fair market value is the clarification given here. Okay, it is more of clarification more than the amendment. So from this, we have to reduce cost of acquisition, which is nothing but net worth. Net worth of the undertaking as on the date of transfer is nothing but the cost of acquisition, and there is no indexation benefit provided here, even though the undertaking is a long term. So straight away, what do we get? We get capital gains, whether it is short term or long term. Computation remains same. Only the rate will change. Only the rate of tax will change. Okay, sir. So with respect to net worth, there is no change, no clarification, nothing. So here, full value of sale consideration is nothing but fair market value. And what is that fair market value? That clarification, they had previously told it will be computed in the manner as may be prescribed. Now that manner is prescribed, which is I have highlighted here in red color. And whatever is the amendment, I have highlighted in red color, guys. So please be aware of. So whatever content is there, same in the black color, it is same as my regular study material. There is no change with respect to that. Changes, any changes or amendment, I have highlighted in red color in my amendment notes. Yeah. So what is that? So this change or clarification is with respect to the third point. Fair market value of capital assets would be higher of fair market value 1 being the fair market value of the capital asset transferred by way of slum sale, and fair market value being the fair market value of the consideration monetary and non-monetary received or accruing as a result of transfer by way of slum sale. Sir, what is it? Now assume there was A Limited, entire company or entire undertaking has been transferred to another company as a slum sale. Okay. In that case, whatever, assume they have sold it for B Limited. Okay. Now A Limited, all the assets and liabilities will become the assets and liabilities of B Limited. Yes, sir, because they have sold entire business. Okay, including all the assets and liabilities. Now, whatever assets and liabilities of A Limited you have transferred, assets and liabilities, whatever is the fair market value of these assets are there. Whatever fair market value of the asset of the transferor is there, we have to take it as FMV1. Okay. Now, obviously, for this, B Limited will pay something to A Limited. It can be in cash or it can be in kind, because sometimes B Limited might give shares of B Limited to A Limited, or else they may give it in money terms. So, whatever B Limited is giving, whether it is in cash or kind, or in money or kind, we will take it as FMV2. FMV2. Okay, so what A Limited is selling, the fair market value of those assets will be FMV1. Whereas in return, what consideration B Limited is giving, who is a purchaser, what is he giving, either in money terms or in kind, whatever he is giving, what is the fair market value of that is FMV2. And we will take whichever is higher, FMV1 or FMV2, whichever is higher will become the full value of sale consideration for computing the capital gains. Hope you guys are clear with this. Oh, yeah, chalo. So this is what the amendments with respect to the capital gains chapter, and there is no other change with respect to that. Yeah, next, chapter 7, that is TDS, TCS and provisions of advance tax. There the topic called TCS is there after TDS. Come to that. Case 4. Case 4. There is one small amendment here. So what is that case 4? It is in page number 187. TCS on remittance outside India or sale of overseas tour package as per section 206C 1G. What is it? We will just go through it. Authorized dealer, that is the person who is engaged in the exchange, receiving from a buyer for remittance out of India, and a seller of overseas tour program package. For example, we can take it as Thomas Cook, who sell the overseas tour package from a buyer, shall collect from the buyer. So what are they trying to tell here? So if there is an authorized dealer who is exchanging the money, who is converting the money from one currency to another currency, or if there is any person that is who is providing tour package, that is overseas tour package. Okay. So if this person is collecting any money from the buyer, buyer is who? The person who is exchanging the currency, or the person who is buying the tour package. Tour package. Now assume this authorized dealer or the overseas tour package person, whoever is providing that service, let us take it as Thomas Cook. So if they are providing, we call them as what? Seller. Okay. Seller. So those person are supposed to collect from the buyer what? TCS. So seller would be charging something for his service. Assume he is charging 10 lakh rupees for his service. He is charging 10 lakh rupees for his service for the buyer. And in addition to this 10 lakh, he should also collect TCS from whom? Buyer. And how much is that? There are three different things here. TCS at 5% for amount exceeding 7 lakh in a financial year, and is for the purpose other than purchase of overseas tour program package. So assume you are exchanging the currency. I am the buyer who is exchanging the currency. I have exchanged the currency worth rupees 10 lakh. Rupees 10 lakh. In that case, seller will collect TCS on what amount? 10 lakh minus 7 lakh is equal to 3 lakh on this 5%. On this 5%, who will collect it? Seller from the buyer. Means only on the amount exceeding 7 lakh, he will collect 5% TCS. Hope it is clear for you. This is in case of currency exchange. Sir, what if it is a loan service? Sorry, what if it is a tour package? The tour operator shall collect TCS on the entire, as there is no threshold limit for him. Now assume the buyer is not buying the currency, is not exchanging the currency. So it is in case of currency exchange. Okay. Now assume I am buying a tour package, overseas tour package for same 10 lakh. In that case, on entire 10 lakh, 5% TCS would be collected. Who will collect it? Seller. Seller will collect 10 lakh from the buyer plus 5% TCS. And that 5% is not his income. He will give it to the government. Yeah, hope you guys understood. So in case of currency exchange, only in excess of 7 lakh TCS would be deducted. Whereas in case of the tour package on the entire amount, irrespective of what is the amount that tour operator is charging, he has to collect 5%. Hope it is clear for you. Okay, sir. Then next, second point, TCS at 0.5% if the amount exceeding 10 lakhs being remitted out is a loan obtained from financial institution as defined in section 80E. 80E talks about education loan for the purpose of pursuing any education. Now assume you are a student who want to pursue foreign education in a foreign country. So you have taken a education loan in India to pursue the higher education in foreign country. And what is the amount of that loan? Let us just take it as 10 lakh. So 10 lakh minus 7 lakh. 7 lakh is the limit. How much is that? 3 lakh into, what is the rate? It will be 0.5%. So on 3 lakh, 0.5% interest, sorry, TCS has to be collected by whom? By the seller. By the seller, whoever is converting this currency. So if there is any currency exchange with respect to education loan for higher education in foreign country, then the amount in excess of 7 lakh, whatever is there, on that only 0.5%. Yeah. Whereas in any other case, on the currency exchange, the rate of TCS is 5%. Yeah. Only for education loan, it is 0.5%. Yeah. So these two are connected. If it is related to education loan, then 0.5%. If it is related to any other thing, then it is 5%. Okay. Fine, sir. Next, provision of this subsection shall not apply if the buyer is liable to deduct tax at source under provision of this act and has deducted such amount. If by chance, if the buyer, okay, if buyer is deducting TDS under any section like 194C or 194J or any other section, in that case, seller will not collect TCS. Seller will not collect TCS on the same transaction. If buyer is already deducting TDS as per section 194C or 194J when he is paying the amount, then seller will not collect TCS on the same transaction. Clear? Yes, sir. And this was the provision which was already there. Nothing new in this. Nothing changed in this. But they have added something new. I just gave a background about this section, guys. Nothing new. Whatever I explained, we have already covered it in our regular class. But instead of directly going to the amendment, I just gave the background about the section. Now, however, TCS under section 206C1G would not be applicable if the buyer is an individual who is not a resident in India, in simple non-resident, and who is visiting India. So simple, if buyer is an individual who is a non-resident, in India as per section 6, which talks about residential status, and he is visiting India, is coming to India for a visit. In that case, TCS would not be collected from the seller, irrespective of who is the seller. If buyer is an individual who is a non-resident who is visiting India, then the seller will not collect TCS. So this is what the amendment is. They have added this newly. So this is what the change is applicable for you. Clear? Yes. Chalo. Then one more thing. Come to page number 188. Non-applicability of TCS. Section 206C 1A. Okay, means TCS is not applicable in few cases. When is it? No collection of tax shall be made in case of resident buyer. Okay. See, whatever we have discussed here, it's only limited to section 206 1G. 1G. What we discussed here. Clear? Okay. No collection of tax shall be made in the course of resident buyer. Okay, buyer is a resident. If such buyer furnishes to a person responsible for collecting tax a declaration in writing in duplicate in the prescribed form and verified in the prescribed manner to the effect that goods referred to in section 206C1 above are to be utilized for the purpose of manufacturing, processing or producing articles or things or for the purpose of generation of power and not for trading purpose. Sir, what is it? See, under section 206C1. Okay, that is what they have mentioned here. 206C1. There are various products covered, guys, like tendu leaves, alcoholic liquor for human consumption, timber and all. Clear? So, In that case, who will be collecting TCS? Seller will be collecting it from the buyer. Agree? Seller will be collecting it from a buyer. So now what they are telling is, if the buyer is a resident and whatever he is buying from the seller, if he is using it for manufacturing purpose, he is not trading in it. Whatever he is buying, he is using those products, that is either timber, tender leaves or alcohol, anything, what he is purchasing, he is not trading in it. He is actually using it as a raw material. Whatever he is buying, he is using it as a raw material. Why? For the purpose of manufacturing. In that case, seller will not collect any TCS. Seller will not collect TCS. That is what is given in this section. And this was already covered, but there is now one clarity given. What is it? It is clarified that the provisions of section 194Q will apply in such cases covered under section 206C1A, and the buyer is to be liable to deduct TDS under section 194Q if the conditions specified therein are fulfilled. So what are they trying to tell here is, sir, here if buyer is covered under section 206C1A, then seller will not collect TCS. But if for buyer, if 194Q is applicable, will he deduct TDS? Yes, he will deduct. He will deduct TDS. That is, as per section 194Q, buyer will be deducting the TDS. Now, sir, what is section 194Q? Chalo, we will just recall. This is nothing new. We already discussed it, but I just quickly give a reference of it. As per section 194Q, if buyer has purchased the goods worth more than 50 lakh in a year from the seller, then when he is making the payment, in excess of 50 lakh, he has to deduct TDS at 0.1%. 0.1%. For example, assume I am a buyer who has bought goods worth 70 lakh in financial year 21-22 from you. I am a buyer. Okay. So how much TDS I need to deduct? 70 lakh minus 50 lakh. 50 lakh is a limit into whatever you get, 0.1%. This is just to track the transaction. This is done just to track the transaction. So buyer would be deducting this much from the seller. But who should be the buyer? All buyer cannot deduct it. They have told the buyer means specified buyer. And who is specified buyer? Whose turnover from the business or gross receipts from the business or profession in the last year is more than 10 crore. So that means I will become a specified buyer in 21-22 if my turnover or gross receipts in last financial year was more than 10 crore. Only in that case, in financial year 21-22, I will become a specified buyer and I am covered under section 194Q. If I am buying any goods worth more than 50 lakh in a year, then in excess of whatever 50 lakh is there, I have to deduct TDS at the rate of 0.1%. That is what the clarity, that is what the section 194Q is talking about. So what they are trying to tell here is, see, if a transaction is covered under section 206C1A, that is, if the buyer is a manufacturer who is buying the goods, then TCS is not applicable. Seller will not collect TCS. Does it mean that TDS is also not applicable? No, TDS might be applicable. Clear? And is it directly telling the TDS is applicable? No. We need to check whether the buyer is a specified buyer and is buying the goods worth more than 50 lakh in a year from the single seller anta. Only then 194Q would be applicable. Clear? If not, 194Q also will not be applicable. For example, assume I am a buyer who is purchasing the tender leaves for manufacturing my output. I have purchased tender leaves worth 30 lakh. In that case, should I deduct TDS? No. Will you collect TCS? No. For you, TCS is not applicable. Why? Because I am purchasing it as a raw material to use in my manufacturing process. Okay, sir. Now I am a buyer. Check 194Q. Have I bought a goods worth more than 50 lakh? No. So TDS is applicable? No, not applicable. Same way, assume I am buying tender leaves worth more than 50 lakh. Assume for 60 lakh. Now, for manufacturing purpose, I am using it as a raw material to manufacture some of my output. Okay, sir. Now the thing is TCS applicable? No. Is TDS 194Q is applicable? Maybe. Why? Because I need to check whether I'm a specified buyer. Just because the value of purchase is more than 50 lakh doesn't mean that straight away TDS would be applicable. I need to check whether I am a specified buyer. To check whether I am a specified buyer, you go and check last year turnover. If it was more than 10 crore from my business or profession, then I am a specified buyer in this year. I will deduct 0.1% TDS on the amount of purchase in excess of 50 lakh. Clear? Hope it is clear for you. Okay, sir. And there is one more clarification given here. See, 194Q is linked with one TCS section. What is it, sir? 206C1H. 206C1H. Sir, what is it? 206C1H will tell, sir, the seller has to collect TCS from the buyer. The seller has to collect the TCS from the buyer if the sale value is more than 50 lakh. At what rate? 0.1% in excess of 50 lakh. And here, seller should be a specified seller. That means he should be having a turnover from his business or profession in the last year more than 50 crore. Yeah. So here the seller should be a specified seller. Clear? So when we are checking 194Q, we will check it for buyer, whether he is a specified buyer or not. Then when it comes to section 206C1H for TCS purpose, we check for seller, whether is he a specified seller. If he is a specified seller and if the sale value is more than 50 lakh and specified seller, we have to check whether the turnover in the last year or gross receipts is more than 10 crore. When? Assume financial year 2021. So in that case, he will become the specified seller in financial year 21-22. So he will collect TCS at what rate? 0.1% in excess of 50 lakh. So for example, assume seller is selling the goods worth 80 lakh. So how much TCS he will collect? Provided he is a specified seller, 80 lakh minus 50 lakh on 30 lakh, he will collect 0.1%. On 30 lakh, he will collect 0.1%. Clear? So totally seller will collect how much from the buyer? 80 lakh plus TCS. Plus TCS. And TCS, what is the amount? 30 lakh into 0.1%. Okay, sir. Now, what is the clarification they are telling is, sir, for the same transaction, can buyer deduct TDS and seller collect TCS? No, not possible. For example, assume I am buying the goods from you. I am buying the goods from you worth 90 lakh. I am a specified buyer. I am a specified buyer and you are also specified seller. You are also specified seller. Now whether TDS will be deducted or whether TCS will be collected or both. That is what the clarity is given. So first what we check is always 194Q from buyer point of view. Is buyer covered under section 194Q? Yes, sir. Will he collect TCS? TDS. Will he deduct TDS? Yes. How much is that? 90 lakh minus 50 lakh, which is equal to 40 lakh into 0.1%. Who is collecting it? Specified buyer. Okay, sir. So buyer has already deducted TDS. Now, will seller also collect TCS? No. Even though he is a specified seller, still section TCS will not be applicable. TCS will not be applicable. That is, on the same transaction, both TDS and TCS will not be applicable. Both will not be applicable. And sir, which should we check first? Always TDS first. Then, if TDS is not applicable, when TDS will not be applicable? When buyer is not a specified buyer. In that case, we will go and check TCS. Whether TCS is applicable for whom? Seller. And if seller is a specified seller, he will collect TCS. And if he is not a specified seller, then even TCS will not be applicable. Yeah. So the clarification given here is, first you have to check TDS, and if it is not applicable for the buyer, then go and check TCS with respect to section 206(1)(h). Yeah. Sir, what if seller is also not covered under section 206(1)(h)? Then TCS is also not applicable. That's all. Clear? Because both section 194Q and section 206(1)(h) is conditional. It is not applicable on all the purchase and sales. They have given some monetary value. That is, purchase and sale value should be more than 50 lakh. Plus, there is some turnover limit what they have given for previous year. When we are checking 194Q, we will check it for a buyer. When we are checking section 206C 1H, then we will see for whom? For the buyer, for the seller. Clear? Yes. So this is 200 and yeah, chalo. So what is that clarification? I will just read it. If a transaction is already covered under section 194Q for a buyer, means if buyer is deducting TDS under section 194Q, then the same transaction will not be covered again under section 206C 1H for seller for TCS purpose. Any one. And which we have to check first always? TDS. And then if TDS is not applicable, we will come and check TCS section. Clear, guys? Yes. Chalo. Next amendment is with respect to chapter 9, which is assessment procedure. There come to page number 212. Assessor is required to file return of income compulsorily. So under section 139 subsection 1, who all supposed to file the income tax return mandatorily is given. Who all are that? We have already seen that. Okay. In detail, we have discussed this provision in our regular class. There is no change in that, but there is some additions. Okay. They have added some more people. Okay. So if you are a person who is not covered in any of these points, that is 1, 2, 3, 4, 5, then you might check this provision. You might check which provision? Rule 12AB, which is added newly now. Clear? So if you are a person who is not covered in any of these 5 points, 1, 2, 3, 4, 5, then you have to go and check Rule 12AB. And if you are covered here totally, how much are there? 1, 2, 3, 4. 4 points are there. And if you are covered in any of these 4 points, you have to file your returns mandatorily. So what are those? We will see. Rule 12AB has been inserted by this notification to prescribe the following other conditions for furnishing return under section 139 subsection 1. What are those? Person other than a company or a firm. Sir, why person other than a company or a firm? Because company and firm, they have to file their return. As per point 1 only, you can check. Company and firm have to file their return. It is mandatory for them. Irrespective of their income, irrespective of their turnover, they have to file the return. So all the company and firm, they have to file the return. Okay. So these points are applicable for any person other than company and a firm who is not covered above. If you already covered above, then you need not check this rule. If you are already covered in any of these points, assume 2, 3, 4, 5, if you are covered in any of these points, then you need not check this rule. So this rule is only for those who are not covered above. Okay. What is it? So I think this is important for you guys because you can expect a question, especially on this monetary limits in your exams. Now, a person who is carrying on a business. Sir, person carrying on a business? Yes, individuals can carry on the business. Partnership firm can, see, partnership firm and company, yes, they will carry the business. They are covered here. So if there is any other person who is carrying on the business, then they are covered here. Other than company and firm. Okay. So a person carrying on the business, if his total sales, turnover or gross receipts, as the case may be in the business, is more than 60 lakhs during the relevant financial year or relevant previous year. Previous year means 21-22. So if I am a person who is doing a business whose turnover from the business is more than 60 lakh in 21-22, then I have to file the return. I have to file my return. A person carrying on the profession. So I am a chartered accountant, practicing chartered accountant, or you are a company secretary, practicing company secretary. You are carrying on the profession, legal profession. So in that case, if your gross receipts is more than 10 lakh during the relevant previous year, and here relevant previous year means for your exams, it is 21-22 guys. Financial year 21-22. Okay. So if the gross receipts from the profession is more than 10 lakh during the previous year, then you have to file your returns mandatorily. Then coming to a resident individual who is aged more than or equal to 60 years, we call them as senior citizen. Resident individual, please be careful. This is not applicable for non-resident individual. Okay. Who is aged more than or equal to 60 years at any time during the relevant previous year. The aggregate of TDS and TCS in his case means TDS deducted plus TCS collected, both put together. If it is more than or equal to 50,000 during a relevant previous year, you have to file your returns. For example, assume my father is aged 64 years. On his income, TDS deducted is 60,000. 60,000. Should he file the returns? Yes. Now, sir, second case. This is the first case. Second case. TDS on his income 30,000 is deducted plus TCS. TCS collected on his sum of the transaction what he has entered into is 30,000. Total is how much? 60,000. So in aggregate more than 50,000. Yes. So he has to file the return. He has to file the return. Okay. Next, any other person. Any other person means who is not a senior citizen. Okay. So here senior citizen as well as super senior citizen both are covered in the A point. Coming to B point, any other person. So any other person covers the person who is aged less than 60 years as well as non-resident. Clear? Because please be careful, who is covered here is resident individual. So now assume my father is aged 64 years and he is a non-resident. In which point is covered? In B point, not in A point. Next, my father is a resident who is aged more than 60 years. Where is he covered? In point A. Please be careful. So point A is only for resident senior citizen or super senior citizen. Okay. So the aggregate of TDS and TCS in this case is more than or equal to 25,000 during the relevant previous year. So for example, assume in financial year 21-22 on my income TDS deducted is 30,000. TDS deducted is 30,000. Should I file the returns mandatorily? Yes, I have to file the returns. Okay, now assume same scenario. My father aged 64 years. He is a senior citizen, resident senior citizen. On his income, TDS deducted is 30,000. Should he file the returns mandatorily? No. He is not covered in this point. He might be covered in other points. I'm not denying it. What I am telling is, he is not covered on that A point. Why? Because TDS is only 30,000. It should be more than 50,000 there. Yeah? Okay, sir. Now assume my father is a non-resident, but he is aged more than 60 years. On his income, 30,000 TDS is deducted. Should he file the returns mandatorily? Yes, he has to file the returns. Why? Because he is covered in the B point. He is covered in B point. Hope it is clear for you. Okay, let me give one more example. Now I am an individual. In financial year 21-22, on my income, TDS deducted is 20,000 and TCS collected is 15,000. In aggregate, how much it is? 35,000. Should I file the returns? Yes. You are mandatory. I should mandatorily file the return because I have covered in this point, guys. I'm covered in this point. Hope it is clear for you. Okay. So coming to the fourth one, a person having a savings bank account, any person, it can be any person, and person covers everything. Please be careful. Section 2, clause 31. A person having savings bank account, the deposit in one or more savings bank account of a person in aggregate more than or equal to 50 lakh during the relevant previous year. Now I have a savings bank account, two savings bank account I have. In one, assume SBI and another is HDFC. Okay. Now in SBI bank, I have kept in my savings account 30 lakh and in HDFC, I have kept 30 lakh. In aggregate, how much, guys? 60 lakh. Should I file my returns mandatorily? Yes, because in aggregate, we always check. In aggregate. Sir, what if I am having only one savings account? So if you are keeping more than 50 lakh or equal to 50 lakh there, you have to file the returns. If not, no. Clear? Yes. And please be careful. This is whatever I have highlighted as per rule 12AB in red color is just an amendments. All other things, whatever we already learned in our regular class remains same. Clear? Always, please be careful. First, you have to check whether a person is covered in any of these 5 points first. If he is not covered in these 5 points, then you go and check this. Clear? If a person is already covered in first 5 points, then no need to check this rule. Okay, sir. Please be careful. I feel somewhere this is important. You may get a question. Then coming to due date for filing the return of income, there is no change in this. It remains same. I've just given it for your reference here. There is no change in that. Okay. Next change is with respect to quoting of Aadhar number. Come to section 139AA, page number 220. So here there are only few changes. Okay, especially they have added some section and all. Okay, but some background first we will go through. Whatever is in black color, whatever contents are there in black color, it is same like what was there in our regular study material. But just for background sake, I have taken. Yeah, let me go through it. Every person who is eligible to obtain Aadhar number shall quote Aadhar number mandatorily in the application for allotment of PAN and in his income tax return. Okay. Note, where the person does not possess the Aadhaar number, the enrollment ID of the Aadhaar application form issued to him at the time of enrollment shall be quoted in the application for PAN or in the return of income. Okay. So if he is not having Aadhaar number, then at least enrollment ID you have to give it. Now, intimation of Aadhaar number to prescribed authority. So there was a time limit provided to link your Aadhaar with your PAN on income tax website or NSDL. Clear? And what was that maximum due date? If you don't do it within the due date, then what are the consequences? They have covered it here. Let us see. Intimation of Aadhaar number to a prescribed authority. This is important. Every person who has been allotted permanent account number, that is PAN, as on 1st July 2017 and who is eligible to obtain Aadhaar number shall intimate his Aadhaar number to a prescribed authority, that is income tax department, on or before what date? 31st March 2022. Previously, different due dates was given. They kept on extending it. The last time limit what they provided was 31st March 2022. And within this time, you are supposed to link your Aadhaar to your PAN. That is what they told. Okay. And for income tax purpose, PAN is a unique number. They just try to link it with you so that they can track the transaction. Who? Income tax department. So now with the help of this Aadhaar and PAN, the department is able to track the transaction. What is coming in, what is going out of your bank account, everything they are able to trace. That is what the intention of linking this Aadhaar with the PAN. And many people, many individual assessees, they are getting the notice from the department or they are getting the mail telling that, see, as per your return, this is what the income you are disclosed, but what we have observed in your bank account is more credit. You have got more credit, more than 10 lakh, more than 20 lakh. So please refile your returns or reconfirm whatever income you have disclosed. Is it correct or not? Chalo. So it is mandatory to quote and link Aadhaar number while filing the return of income, either manually or electronically, unless specifically exempted. Unless specifically exempted, you have to link your Aadhaar to the PAN. Okay. Now, what are the consequences of failure to intimate Aadhaar number? If you don't link your Aadhaar to PAN, what happens? If a person fails to intimate the Aadhaar number, the permanent account number allotted to such person shall become what? Inoperative. That means your PAN will become invalid if you don't link it with your Aadhaar after the date so notified in the prescribed manner. And what was the date which was notified? 31st March 22. If you fail to intimate, which is already over as of now. So if you fail to intimate your Aadhaar, or if you fail to link your Aadhaar with PAN within 31st March 22, then your PAN will become inoperative or invalid. And this provision will not applicable in few cases, which we already seen. So I will not go in detail about this. So this provision is not applicable for few people. What is that? Is given in that paragraph. Now, coming to the amendment part. P for default relating to intimation of Aadhaar number. Section 234H. What is it? This is a new section which they have added. If you fail to link your Aadhaar with PAN, then you are liable to pay fees, late fee. What is it? When a person who is required to intimate his Aadhaar number under section 139AA subsection 2 fails to do so on or before the notified date, 31st March 2020, which was the last notified date, he shall be liable to pay such fee as may be prescribed at the time of making intimation under section 139AA 2 after 31st March 2022. So if you are linking your Aadhaar with PAN after 31st March 2022, you have to pay the fee. Okay, you can link it, but with a late fee. And the maximum amount of that fee should be 1000. It cannot exceed more than 1000 rupees. And how much is that is given in rule. Means what is the amount of fees when it has to be paid? It is given. Accordingly, the CBDT has wide notification inserted rule 114(5)(a) to provide that if such person fails to do so, then at the time of subsequent intimation of his Aadhaar number to the prescribed authority, such person would be liable to pay by way of fee an amount equal to 500 in case. So 500, maximum was 1000. So now they are telling 500 in case where such intimation is made within 3 months from the date referred to in section 139AA subsection 2, that is by 30th June 2022, and 1000 in all other cases. So what are they trying to tell? See guys, if you link your Aadhaar with PAN before 31st March 22, no problem at all. no late fee, nothing. But if you link it between 31st March to 30th June 22, then you have to pay a late fee of how much? Rupees 500. You can link it. You can still link it after 31st March 22 within 30th June, but by paying a late fee. Okay, sir. Now, can I still link it after 30th June also? Yes, but the late fee would be 1000 rupees. 1000 rupees. Yeah, so as of now, even 30th June 22 is also over. So if by chance, if any person has not linked his Aadhar to the PAN, he can do it by paying a late fee of how much? 1000 rupees. Okay. Chalo, next rule 114 AAA. This is a rule, not section. Provides that if a PAN of a person has become inoperative, means if it doesn't link before 31st March, what was the consequences? They have clearly told here. Okay, if you fail to do within 31st March 22, then your PAN will become what? Inoperative. So if it becomes inoperative, then what are the consequences? You will not be able to furnish, intimate or quote his PAN and would be liable to all the consequences under the Act for such failure. So if your PAN becomes inoperative, then it is like you are not at all having any PAN. It's same like you are not having PAN. So this will have number of implications such as the person would not be able to file his return without PAN. Your PAN has become inoperating now, and without PAN you cannot file your return, and whatever pending returns will be there, it will not be processed. Then pending refunds will not be processed. You will not get, if by chance if you are eligible for any refund which was supposed to be processed, it will not be processed. Why? Because your PAN has become inoperative. Then pending proceedings as in the case of defective returns cannot be completed once the PAN is inoperative. Then tax will be required to be deducted at higher rate as PAN becomes inoperative. Now assume you are a payee. Okay, so on your incomes, payer is deducting TDS, and when payer is deducting TDS, you are supposed to give the PAN. And if you are not having any PAN, because inoperative PAN means is equal to not having PAN, so in that case what happens? He will deduct TDS at a higher rate. Okay, he will consider that payee is not having PAN and he will accordingly deduct TDS at higher rate. Okay, so these are some serious consequences which a person has to face if he failed to link his Aadhar. Okay, but some relaxation is given. In addition to the above, the taxpayer might face difficulty at various other fora like banks and other financial portals, as PAN is one of the important KYC, that is know your client, criterion for all kinds of financial transactions. Now, many places they ask PAN. For example, if you want to open Demat account, PAN is a must. Then if you want to open a bank account, PAN is a required. Then for some transactions also, if you are buying anything or if you are entering into any transaction more than certain limits, then you are supposed to give your PAN. And if your PAN is inoperative, then you may not be able to enter into that transaction, or you may not be able to open your bank account, you may not be able to open your Demat account. Okay. Next, as per rule 114 AAA 2, where a person whose PAN has become inoperative under rule 114 AAA 1 would be liable for all the consequences under the Act for not furnishing, intimating or quoting the PAN. So he will be liable for all these consequences. He has to face it because government gave enough time to link your Aadhar with PAN. You didn't even do it within the due date which I gave. And 31st March is not the due date which they gave first. They gave first previously some other due dates and all. They kept on extending it. The last due date what they kept was 31st March 22. Okay, but now again they have given some more relaxation. What is it? We will see. In order to have smooth application of section 234H and existing rule 114 AAA, it is clarified that impact of rule 114 AAA 2 would come into effect from when? 1st April 23, and the period from 1st April 22 to 31st March 2023 would be the period during which rule 114 AAA 2 would not have its negative consequences. Negative consequences means whatever we have discussed here will not be applicable till 1st April 23. However, the taxpayer have to pay the late fee. He has to pay the late fee. Sir, what is the summary of all this? Simple, guys. The due date to link your Aadhar to PAN was 31st March 22. Still it remains the same, and whoever has not done can still do it. But what they told earlier was your PAN will become inoperative. But now what they are telling is, see, till 31st March 23, it will not become inoperative. You can still link your Aadhaar. It will not become inoperative. You can still file. For example, till 31st March 23, even though you are not linked your Aadhaar to PAN, still this implications will not be applicable for you. This consequences may not be applicable for you. Okay. So what are they trying to tell here is, maximum try to link your Aadhaar within 31st March 23. If not, you have to face serious consequences and your PAN will become inoperative. Clear? So just to summarize this, see, 31st March 22 was the last due date to link your Aadhaar with PAN. If not, they told your PAN will become inoperative. But now they have added a new section called 234H telling, if you still link your Aadhaar after 31st March 22, you can do it, but with a late fee. So till 30th June, if you do it, that is between 31st March to 30th June, if you link your Aadhaar, the late fee would be 500. You can link it. And after 30th June to 31st March, if you are linking it, the late fee would be 1000 rupees. Until 31st March 23, there won't be any serious consequences. But after that, you might face it. So that is why, if you or your parents, friends, or anyone who has not linked the Aadhaar to your PAN till now, please make sure that they are linking it. Okay. If you are already done, please cross check your close circle, your friends, parents, uncle, brother, grandparents, everyone. Just cross check once whether everyone have linked their Aadhaar with their PAN. If not, do it immediately, guys. Okay, help them doing it, because most of the parents or uneducated people or even grandparents might not be aware of all these things. If by chance, if there is any person who has not linked still, please help them to do it. Okay, you can do it on NSDL portal or on Income Tax Department, their website. Yeah, chalo. Fine, guys. So the next amendment, the last one, is with respect to chapter 10, that is alternate minimum tax. Come to page number 221. So alternate minimum tax, when it is applicable, no much change. Only one point, there is a change here. What is it? See, what is the rate of alternate minimum tax? It is 18.5%. It is 18 point, means AMT is not actually applicable for everyone. So if you are claiming certain deductions, only in that case it will be applicable, which is given here. Okay. What is the rate of AMT? 18.5% on adjusted total income. But the new thing here is, AMT is levied at 15% in case of cooperative society instead of 18%, 18.5%. So if the assessee is a cooperative society for whom alternate minimum tax is payable, okay, means applicable. So when it is applicable and all, we have seen, if they are claiming any deductions under chapter 6A under the heading C or section 10AA or 35AD, the AMT rate is 18.5% on adjusted total income. But if it is a cooperative society, calculation, everything remains same. For them also, we have to calculate adjusted total income by adding whatever deduction they have claimed under these three heads. We will add back and calculate adjusted total income. And for them, the AMT rate is 15% instead of 18.5%. All other points remain same. Okay. When it comes to, sir, what about the health and education says it remains 4%. All other things remain same. Instead of 18.5% AMT rate for cooperative society, it is 15%. That is the only change. All other provisions remains same, guys. Hope it is clear for you. Fine. Chalo. So this is all about the amendments which are applicable for December 22 exams for your executive exams, guys. Clear. So only few things are there. Whatever we have already covered in our class is the same thing applicable with this few changes. And this notes also will be shared with you. Make the best use of this and clear your exams with very good marks, guys. Clear? Yes. And at the end, I have also given the note, that is amendments or new provisions applicable for December exam is highlighted in red color. So you guys need not worry about the contents which are in black color. I have taken that only for the reference sake, so that you guys, it becomes easy for you to refer where exactly is this provision in our regular material. And coming to the page number what I have mentioned here at the top is the page numbers as per my regular study material, guys. Yeah. Hope this session was helpful for you. All the very best for your preparation as well as the exams, guys. Thank you. Bye-bye.